Joining us this morning, UBS Broadlines, Hardlines, and Retail Analyst Michael Lasser. Michael, good to see you again. Thanks for the time this morning.
Morning, Carl.
We mentioned the hurricane-related dynamic. You think warm weather had something to do with it too, right?
I do, Carl. It was very warm in October, which extended the home improvement season, enabled homeowners to do more projects and pros to do more projects outside than they normally would. It was probably 100 to 150, maybe slightly more basis point benefit to the overall quarter. With that being said, Carl, if you put aside the weather impact, there's still stabilization that Home Depot is seeing in areas like kitchen and bath remodels, meaning those categories are not getting worse. And what that means is it's going to usher in what's likely to be a multi-year recovery in home improvement demand. And Home Depot stands in a great spot to benefit from that as we move into next year and beyond.
Interesting. What do you make of the gross margin decline? Is that just a blip?
So the gross margin decline was due to the inclusion of a distributor that Home Depot bought over the summer, SRS, which better positions Home Depot to gain market share and mind share with this ever important pro customer demographic. That contributed about 80 basis points to the overall gross margin. If you back that out, Home Depot's gross margin was actually up 40 basis points, and that's a sign of continued strong execution, managing price pretty well, shrink, generating modest improvements, and we think that continues as we head into 2025.
Stock's been bumping up against your 425 target. It sounds like you're willing to be a little patient there.
I think you need to be patient with this stock. We are just at the early inflection of a multi-year recovery in home improvement demand. This is going to be accelerated in part by the prospect that interest rates move down. That frees up some of the stickiness that has occurred in existing home sales. So the more move events, that would be better for home improvement demand. Homeowners who are moving tend to spend more on their home than those who are not. And the value of the housing stock is just so much greater than it was several years ago. And it's older, much like we are, Carl. I hate me much more than you. But with that being said, all of these conditions set up home improvement well, and we are just at the precipice of moving from what's been a transitional period in the category to a period of very healthy growth for the category.
Finally, Michael, I wonder, is there any rhyme or reason to the suppliers? I'm looking at, say, for instance, the delta between a Sherwin-Williams and a Stanley Black & Decker.
Rhyme or reason depends a lot on the category that the various companies serve. So, for example, Home Depot noted that paint is actually starting to see some improvement. And paint is one of the home improvement projects that's likely to be completed during good and not so good economic periods. So that's going to influence the various vendors' performance versus something that's more big ticket related, associated with the move. I wouldn't draw any conclusions otherwise, other than we're seeing dichotomous trends across categories based on what's happening in the unique fundamentals of that product set.
Interesting. Look forward. We need to touch base, Michael, in the coming days on retail as we get into a more compressed Thanksgiving holiday season. Michael Lasser, thanks so much.